Hi, everybody. Welcome to Fin Factor. I'm your host, Blaine Bertsch, co-founder and CEO at Dry Run Cash Flow Forecasting Software. And I'm really excited to have joining me today, Jennifer Warawa. She's the president of QuickFee North America. And we talked just a couple of weeks ago. And Jennifer, I know we talked quite a bit because I was learning a lot about some of the innovative ways that you guys work with small businesses to help keep cash moving and to fund them. And there were some I hadn't even, to be honest, kind of heard of the approach you take, and I thought this is something that kind of needs to be on the radar of other finance pros. Welcome to the show.
Thanks for having me. I appreciate it. Looking forward to the conversation.
And so, give me just the quick sort of Coles notes. What is QuickFee, and what are some of the main sort of services you guys offer?
Yeah, so we are essentially on a mission to help businesses get paid faster. We work with professional service firms and we offer your traditional digital payment. So if you think about ACH, card, etc., that just traditional digital payments. We do AR automation, but the part that you and I were talking about that you're like, wait a minute, I haven't exactly heard of that before, is our financing product. And what we do is we allow the clients of professional service firms to pay their invoice over 3, 6, 9, or 12 months, and we pay the firm in full at the time of the invoice. And we've done everything as low as a $2,000 invoice up to a $1.1 million invoice.
And this is something like, I don't know if this is, maybe I'm just living under a rock a little bit, but it was a very different way of approaching and solving that sort of problem. Because of course, factoring I know is quite common, but it's not.
Mm-hmm.
This is very different, and it's an approach that I think makes much more sense to the vendor because they actually get paid for their full fee, and it puts the onus onto the client that, hey, if they're the ones that are paying late, you're helping them basically pay their bills, move their business forward, stay liquid. How, like, where does this sort of concept come from? Is this something that's commonplace, or is it a relatively new thing?
Yeah, so our founder founded the business in 2009 in Australia, and he was actually in the accounting profession and just saw an opportunity when you think about fee funding or premium insurance funding. It's like, why doesn't something like that exist for accounting firms or professional service firms? And, factoring can be an option, but why do you want to take a haircut off the top just so you can get paid in the time frame that you're supposed to get paid? So he's like, there's got to be a way to solve this problem. And so he went out and created our QuickFee Finance, which is our kind of our crown jewel product, if you will. And it's used primarily by accounting firms, but many different professional service firms like architects or lawyers or executive search firms. So all B2B professional services are who we work with.
And this, I think the reason that this perked my ears up was like I ran a creative agency for over a decade. We never used factoring. We had heard of it. That was basically it, but we
Mm-hmm.
never used
Yeah.
factoring. We were really, fortunate in some ways that 70% of our customer base were government agencies. So we kind of knew we were getting paid. The
Yeah.
slowdowns were always kind of in internal slowdowns, but once things were approved, it would get, things would get moving. But then of course we had this other chunk that were corporate clients. The smaller ones sometimes would be a little bit more difficult to sort of keep the cash moving. But I know in our industry at that time, it was very common that a lot of friends of mine that had agencies were working almost exclusively with smaller business, and it was just sort of a constant problem that they were running into.
Yeah.
So
Well, I
I
think
can absolutely relate to that, right?
Well, I think there's a couple things, which is there's your late payers, which there's two kinds of late payers, people who have the money and people who don't. So,
Mm-hmm.
they have the cash on hand, they just don't want to part with it. And I'd say
Yeah.
especially this year in the US, election year, uncertainty in the economy, people are like, I'd like to save my money for a rainy day. So they're going to drag their feet as long as possible. And then there's people who just, for whatever reason, they don't have the cash available. They're waiting to get paid from somewhere else, or they have a round of funding coming, whatever the case might be, and so they physically don't have the cash to pay. So you've got that's kind of on the people that are paying their invoice, if you will. But we're seeing more and more firms, even creative agencies like you were talking about earlier, where they need it to win the deal. So they're going to a
Mm,
customer, and the customer is like, well, you know, do I have to have creative? Well, I do kind of need it, but is it, you know, life or death? No, not really. So it's like kind of a discretionary expense,
mm,
but my business needs it to kind of, power up. But I don't have the cash around today because I didn't really plan on this, or this wasn't something that I saw coming. So they have good cash flow, they have good financials, they're a good customer, but they just don't have the money right now, and they didn't plan on spending it. So they're like, would you offer payment terms? And lots of times, what we found is there are professional service firms that say, sure, I'll do it myself. I'll fund it. You can pay me over 6 months, but they don't charge interest. And their client pays them back over a period of time. So in this case, it helps win a deal. And we have a number of customers where this helps them actually secure that business.
the idea that you can use this as a way to close a deal, because that was something I hadn't really considered, that there's a way for a business to sort of fund a project. And of course, like it's difficult out there right now for small businesses, a little
Yeah.
bit of a challenge. This is often a time where they need to market, where they need to advertise, but they're not going to have funds. And of course, when they're flush with funds, a lot of times, like, well, they're spending on advertising just as like doubling down, right? So
Yeah.
I thought that was a really interesting thing. So again, this is something that I imagine, like, how do you get on the radar of businesses and accounting firms and everything, and show them the breadth of what you guys can do?
Yeah, I mean it's a little bit harder here than in the Australian market. So in the Australian market, this is actually quite a common offering. So there's lots of different vendors that offer it. So it's not do you use it, it's who do you use. So it's actually, and it's always easier to sell something to someone when they've heard of it before, because if they haven't heard of it, they're like, first I have to wrap my mind around exactly what this is and then figure out what my use case is. I think that we do a lot of events, which sounds old school, but we work a lot with accountants, and that's where they're going to kind of take time away from their practice and their firm to go and see what's new and decide what am I going to be using for the next year as I look at new innovative technology and different options. So there's a lot of decision making in the accounting profession that happens at events. Obviously we get a lot from online marketing. Interestingly enough, I mean, we just had a new customer last week that found us on LinkedIn, just saw a use case on LinkedIn and was like, that's exactly what I need. And then we had someone that found us on ChatGPT. I think that was our first person that said, yes, I found you on ChatGPT, which is how I look for people, but you don't always think of other people looking there. So it
Yeah.
was interesting.
It's yeah, the world's changing, the way people find um
Absolutely.
yeah, it's we've actually, like, early on fed ChatGPT everything we could about us just so that it knew. So we didn't wait for it to go and scrape the internet. It was
Yeah.
like, here's what we do. And I actually think it helped. So but so I imagine there's also, like, they need to sort of understand there's this possibility, but they also are going to have to educate their clients a lot of times on this. How do you help them do that? Like, to be able to educate their clients and kind of make it something that's probably unfamiliar, kind of feel familiar.
Yeah, absolutely. So there's two different answers to that, and I'm going to give you the Australian answer and the US answer because it's different in each market. Surprising, like you would think that it would be consistent, but it's not really. In the US, most of our loans are as a result of someone going to their professional service provider's website, and they can see I can pay out of my bank account, I can pay using my credit card, or I can do a monthly payment plan. So they see that payment option right there and they're like, oh, monthly payment plan. That's
Mm.
something I hadn't seen. And they could just click on it and decide whether or not it's something that they want. That's more of a after the fact. They've got their invoice, they go to the website. In Australia, the majority of the business comes from the professional service firm doing a quote, if you will, saying, okay, if you want to pay this over 6 months, here's an option. This is what it's going to cost you, and here's what your monthly payments would be. And they generate most of their activity by sending out quotes. So they will just be more proactive, send out an invoice, say you can pay today or you can pay on monthly payments, but either way, we're going to get this cleared up. So it's a little bit different in both markets. And I think both markets have tried the other formula to say, like, oh, could this work here? And it just doesn't seem to work the same way in each of the markets. But I think probably the most common mistake that we see is when a firm is like, oh, that customer has a lot of money, they wouldn't use this. Like it's just, so we see that, so they're kind of vetting who needs it and who
Mm-hmm.
doesn't need it. And when they actually put it on their website, they find that their least likely customers that they would suspect would use a payment service like this, they're the ones who are using it. And sometimes they'll reach
Yeah.
out to them and say, hey, I'm an accounting firm. We just did your books. I know you have lots of money. That seems weird that you take out a monthly payment plan. They're like, well, I'm trying to decide. I've got a property that we're buying. I've got a down payment I got to put down. This was really easy, quick money to get, allows me to take the funds that I have and deploy them elsewhere. So it's just a totally different view. So I think we've had a lot of that with firms where they think it's for people who don't have the money, but sometimes it's the people who just want to deploy their money in a different way.
It's interesting because, like, of course, we're a forecasting software. So as we're talking with clients and we're doing implementations and training and that, this is just what we hear all day is, it's like, yeah, no, we've got our AR, AP, our cash flow and everything. But what we're trying to figure out is we want to open another location, and there's always something. And we're trying to
Yeah.
do this. We want to do that. We have to expand. We've got to crawl this one, back a bit. And being able to see, like, how do you make the most of your dollars, is basically like exactly what you're talking about. So it sounds like, so North America would be quite a bit of a newer market for you than I'm guessing than here.
Yeah, so we've been in the US since 2016. So we've been here 8 years, but it's definitely newer than the Australian market.
Yeah, yeah, and so that's where I imagine you get to see all these things and learn all these things and share information back and forth. So how like I'm still sort of wrapping my head a little bit around the different ways that you could present this as, let's say I'm an accounting firm. It's like, yeah, there's the ways that, hey, we can get money from our customers so they can do this. But I imagine there's also a bit of that pipeline where it's like they can educate their customers on using this sort of third party service. Has nothing to do with them or with those clients all
Yeah.
the way downstream. But it's just it adds on to this approach that so many CPAs are taking now as being sort of that trusted advisor. So
Hmm.
is that something that I imagine are kind of empowering them with as well?
Yeah, absolutely. So I think that when you think about the advisor role, many times when they're thinking about client advisory services, their client has budgeted for tax. That's just, it's like every year I pay X amount of dollars, I get my taxes done. Then they run into a situation where they're like, oh, I would benefit from some advisory, some cash flow, consulting or whatever the case might be, but I didn't budget for that because I just budgeted for tax. And now there's this consulting opportunity that I'd love to retain a firm for, but I didn't budget for it. And so that's where the CPA firm would say, well, we have a monthly payment plan option. And so it's like, okay, well, then that would make it affordable. That allows me to be able to, manage my cash flow in a way that makes sense. So they'll
Mhm.
present it at the time that they're sharing. And lots of times if it's an MSP or an IT provider and they're doing work because there was a data breach or a security breach, that wasn't planned. And although they have a contingency for it, they just don't maybe have as much money as they need to rectify the problem. And it's time sensitive. They can't be like, well, I'm going to get it done next month. It's like, no, I need to sort this out today. So they'll present that monthly payment plan. We do have a kind of a digital payments toolkit that we give to firms that allows them to go out to their customers and say, hey, we're trying to get out of the paper business, and we'd prefer that you pay online. And we do have a monthly payment plan option as well as options for you to be able to pay now, and here's how all of those work. So we give them some tools that they can go out to their customers with. But we definitely see, we have some firms that use it in the sales process, and they'll use it like it's actually part of their sales pitch deck. So they'll get to the point in the sales pitch deck where they'll say, okay, this is going to be, $30,000 for you
Mhm.
to engage in these services. And then the next slide is you can pay it up to 12 months, and here's what the monthly payments will be. And it's kind of has a little bit of sticker shock at first when they give them the whole amount, and then when they break it down, they're like, okay, well, that's manageable. And so
Mhm.
it allows them to sell more of their services upfront.
So one of the things I want to ask you though too is so that let's say there's a payment option on a website or whatever. Is there a credit check with you guys for that end client, or how does that work that you're sort of vetting and making sure that they can kind of pay you guys?
Yeah, so it's actually a different underwriting process than a typical loan, if you will. So we actually underwrite the firm. So if we're doing business with a certain CPA firm, we'll underwrite the firm and give them kind of a credit line amount of what
Mm,
they are able to offer out to their customers, which can be up to 10% of revenue. So they will essentially offer this out to their clients as a payment option. If their client takes up the payment option, if the invoice is over $35,000, we do a credit check. It's a soft credit check, so it means it doesn't hit their credit, but does look for things like, are there any liens outstanding? Do they have any judgments against them? Is there bad debt we should know about? So
mhm.
it's a soft credit book because most people don't want a ding on their credit report just because they paid an invoice over a monthly payment plan.
Yeah.
So we would then go back to the firm and let them know, hey, I don't know if you know this, this client of yours has this going on in their history. Many times the firm will say, yes, I already know about that. I've been part of the process. I know what the deal is. I still want to go gives to their customer. Because at the end of the day,
Mm.
the firm is actually the one that is on the responsible side or is responsible if their client doesn't pay. That happens less than 1% of the time, which is why we work in professional services because people typically don't want to run out on their accountant. They typically want to make sure that they get paid. It works
Mhm.
well, for a firm. They're not just going to offer it to customers they don't think are going to pay. It's not a way to get out of them, oh, this is going to be bad debt. I'll just get the money from QuickFee and then they can chase them around. That wouldn't work that way because
Yeah.
we just go back to the firm. So there's
Yeah.
kind of we're underwriting, but the firm is also underwriting in a way as well.
Yeah, and that like I was wondering that because I'm like, in order for you to give reasonable rates and everything, there has to be some sort of security
Yeah.
for both of you.
Yes.
So okay, that makes a lot of sense, and it does uh, dovetail really well with like even when like I said when I had my firm, we kind of knew who our clients were, we knew what they were about, we knew,
100%.
but sometimes they're slower than you want them to be, right?
Yes.
So
Yeah. Yeah. So you'd offer it to your good customers, or sometimes the firm won't approve it if they're part of the approval flow. If they're like, I don't know if this person, they're looking like they might go to business or are they going to be around? They know the circumstances. We can just not approve that loan and then the client pays another way.
mhm.
So when the firm's involved, especially when they have a good AR process, it's like, hey, this is a client that we've worked with for a number of years. They've always paid. Maybe they haven't always paid quickly, but they've always paid. Then they're more likely to offer them payment terms.
Yeah.
I think the
um,
one thing that's important to remember is sometimes when a firm says, well, so if they don't pay you back, then who's on the hook? And I said, well, if they don't pay their invoice today, who's on the hook? And they're like, no, that's fair. Never mind. Like it's because
yeah.
it's sitting in accounts receivable. They've already done the
Yeah.
work. They've given them the invoice and they don't have the money. So either way, if they don't get paid, they're not getting paid. So,
Yeah.
so they're like, yeah, that's fair. I already am on the hook. Carry on. So
Yeah, and it just improves the chances, quite frankly, of getting paid, and you can also get the benefit of getting all that money up front. Like it's, yeah, it's I can really see the benefit of it, and it's was like I said, I was really intrigued by it as an option that just made so much sense for professional services, especially with my background and familiarity with some of the bumps in the road there. So Jennifer, this is really was terrific information and really helpful. How do people find you if they want to learn about QuickFee and this, especially this particular service?
yeah, so quickfee.com is our website, has information about all of our solutions, including our finance product, QuickFee Finance. Or certainly reach out to me individually. I'm happy to connect someone in with one of our sales team members or get them looked after. But yeah, happy to connect.
That's terrific. Well, thank you so much, Jennifer. I really enjoyed our chat, learned a lot, and again, if any of you out there are looking for a way to forecast your cash flow, especially if it's complicated, multi-location, multi-entity, consolidation, multiple people, the more complicated it gets, the more we can help. So come and visit us at dryrun.com. We'd love to help you out.